Nestle is the world's leading nutrition, health and wellness company. It was founded in 1866 by a Swiss pharmacist, Henri Nestle.
Exactly. So we talk about this one because it is one of the world's largest consumer companies. We'll go in a minute through all of their divisions. It ranges from coffee to pet food, everything across the board. Headquartered, of course, in Switzerland.
Market cap here, $237 billion US, PE of 15.5, and a dividend yield of just over 3%. I know Paul likes Nestle. Let's get your thoughts, Gary, from the top.
Well, I think if we look at it compared to the other companies we're going to look at, it's one of the cheaper ones. I mean, it's only trading on a PE of 15, which is, I think, everything else other than probably our last one is above 30 PE. So, I mean, it is representing some value. It hasn't quite had the share price appreciation of the rest, which perhaps is a little bit concerning. I know, I mean, Nestle, obviously, you can go through their products, but like Paul says, it's absolutely vast. Its geography is vast as well. I mean, you're looking at about 200 companies. You've got like 600 factories that manufacture in the different areas. I mean, just to give you an idea, just in the US, I think a third of the frozen food aisle is Nestle products. So it's massive multinational, but has been struggling a little bit on the consumer side so far.
This is the US listed American depository receipt. You can also, of course, buy them in Switzerland if you're set up and organized in the European market. But as far as Nestle is concerned, the big three divisions are coffee, where they make Nescafe and the Nespresso.
And the Nespresso, which has just taken the world by storm.
That's a fabulous
I don't know how much of that has to do with George Clooney.
Then another big part of the business is water. They own Perrier and Evian, and then that Nestle Future Life, or whatever it's called, which is basically recycled water, cleaned up. And then there's a big division in drinks as well, which is everything from, Milo and all that sort of stuff. Nespresso, not Nespresso. What's the stuff the kids drink that they add the milk to?
Nesquik.
Exactly, that kind of stuff. And then sweets. I mentioned dog food earlier. Frozen, milk-related dairy products also huge in that space. You
can't go wrong, or is there any downside here?
No, I think it's very stable because just as a function of its size. But the only thing that I would struggle to see is where's the next growth avenue going to come from. I mean, if you look at where their sales have been fairly flat, in the US. I think they were up only about 2 and a bit %. But in emerging markets, which they're pushing into, and they have a good presence in already, I mean, you're still looking at sort of 6.5% sales growth, which, for a company this size is absolutely fantastic.
Where's the growth going to come from, Paul?
Well, I guess some of the divisions could continue to do well. So water, I would say, is going to do well because, of course, people are slowing down substantially their soda consumption, not drinking so many cans of Coke, and water is a main beneficiary of that. I think the coffee business is a very strong one, and that's going to continue to do very well. I mean, I think it is fair to say this is a bit of a leviathan. You might say, well, why didn't I rather buy Tiger Brands, because that's focused on the African continent, or Pioneer Foods. But if you're looking for safety, if you're going offshore and you want a high margin of safety and a low margin of error, I don't know if that's the right analogy. This is certainly
I think there'll be a lot of people wanting to deploy that strategy in what could be turbulent markets going forward.
Definitely. I think Paul summed it up perfectly there. It is huge, it's massive, it's got, I think, a fair margin of safety in it because of the fairly low multiple. I think you've got to be hot on it. Yeah.
Paul, hot or not?
Yep, hot, fine, happy to have.